Welcome. We've made it to the end of the week here on the weekly close. There's a lot of news that's going on in the world. Apparently, there's a potential civil war. Aliens are coming to invade our planet, according to the Pentagon. Uh, there's so many things World War III, there's so many things that we could say hit our bingo sheet for 2023, 2024. I think it's not quite done. I think we're going to talk about the banks today and why that might be the most realistic one that happens of them all. All that and much more. Today's episode of Money Never Sleeps. Welcome back to Money Never Sleeps. I'm here joined with Mr. House again. I'm glad to have him here. Before we get into anything, just a reminder, we are not financial advisors. Nothing we say is financial advice. Before you make any financial decisions of your own, make sure you consult with your financial advisor or just do some research. It has to be said, guys, we are not responsible for anything that you guys do or what we say on this show. I opened up the show today with all that news because there is a lot of headlines out there that are kind of fun, right? I just pulled up Twitter right now. I'm seeing Governor Greg Abbott in the National Guard at the Texas border. Apparently, there's an oil tanker that was just struck by a missile in the Red Sea. There's a lot of things that are going on right now in the world. And I think the equity markets are just not pricing in anything bad. And it's like, well, at some point you guys are going to be wrong. And it unfortunately might be wrong in a big way, right? We're going to talk a little bit about the bank term funding program. A lot of news that we got out of there. We're going to go over to Asia. We got some crypto news too. Not even news, just Bitcoin doing extremely well today, right? We're at 42K. Let's see how long that lasts. And then we'll take a look at some of the GDP and PCE data. But to start today, how are we doing? What's catching your eye in the markets? Anything you think that is noteworthy we should cover today on the show?
Well, I'm tired, but doing well. We're surviving. As far as the markets, I feel like everyone woke up to a nice little surprise pump as far as crypto goes, but I would not be surprised to see this pump be short lived. And that's where my focus is probably going to be over the weekend. I'm not planning on really trading it too much. Think we're in the middle of kind of like a shakeout, trying to see, like, you have the JP Morgan analyst saying grayscale BTC outflows are done, but I'm like, I don't know if I'm so sure about that. So yeah, that's kind of where I'm at. What about you?
Yeah, I don't trust much of what JP Morgan has to say half the time, or any of these analysts. And I think the reason that I say that is because I think I've mentioned it to you and a couple of other guys just in our group chats and stuff like that. They will never tell you that the market's going to crash. Like, I mean, that's something that should be a given, but they're never going to tell you if anything bad's ever going to happen, right? They're always going to say, well, no, we're data dependent, everything looks good. I mean, we've seen hit time and time again, 2000, 2001, 2008, 2020, February 2020 especially, that they do not expect anything to go wrong. They give you these estimates, they give you these numbers that, maybe things are turning around. And again, that could be anything from Apple having a strong year this year to, the Bitcoin ETF outflows slowing down to the point where it's like, maybe it's time for a little bit of a rally. So I don't believe a single word of any of these bankers, and especially after we got the news out of the bank term funding program. I do want to start there today just because it's going to be, I think, the most important thing going into March. And I will say this, it's not even the most important problem globally, but it is one of the most important ones for the United States. And I think we are in a pretty shitty situation, and we can see how bad it really gets over the next few weeks, because we saw that the bank term funding program is officially going to be concluding on March 11th of this year. It started last year when Silicon Valley, First Republic, Signature, all those had key outflows to the point where they were insolvent. And because of that, it pretty much allowed these banks to borrow at a discount rate, and then they would have to pay it back 1 year after the loan was made. Now I'm going to pull up this article from Reuters. Again, we've got a couple of Reuters articles here today that are going to be interesting, but Yeah, it ends on March 11th, which a lot of people didn't think it was going to happen. They thought that they were going to extend the window. I didn't think it was going to happen. I think we've on the show said that they were going to cut it off come March 11th. It's a very different situation than where we were last year, especially with where we are in the equity market. Same with where we are in the bond market. Those are two very different places now, right? The bond market's kind of pricing in the fact that we might see some rate cuts this year, and we're starting to see that yield inversion revert back to zero. So it's going to be really interesting if we see that. I mean, the closer that we got to that 0 point, the Fed was unlikely to extend any type of facilities. It was more likely to think that this was a sign that the soft landing is coming. However, we know that the Federal Reserve, every other central banker, has this completely wrong. But looking at this, it was really interesting. What I saw was how much they increased the percentage at which people were going to be borrowing. So the BTFP loan rate was 4.93% prior to the announcement that they were going to be closing the facility. Afterwards, that night, it jumped to 5.4%. And why is that important? Well, obviously, it's a big amount of money. Big difference if you're borrowing a shit ton of money, right? You got to pay that back within 1 year's time. We might even be in a better situation in 1 year's time, right? Liquidity could be standstill. We could see that the shortage or the collateral shortage is really amped up to the point where it's like everyone's selling off everything just to be able to make good on some of their debts. But the thing that's really interesting to me about that is that if we look at the Bank Term Funding Program chart, I'm going to pull that up right now. You can see how much it's gone up significantly in the in the year or so, or almost a year that we've been using this facility. So there's really one thing that kind of interests me here. Let me get rid of that. There we are. See how much we've gone up. We're at that red line right there. You can see that we've gone up significantly. This week alone, we're up 3.88%. Last week, we were up 9.73%. There hasn't been anywhere except April of 2023 where we had any type of pullback. And once we hit that pullback, we started shooting up. And now, what the Federal Reserve is saying is happening with the Bank Term Funding Program, why they're closing it, and why they are raising their interest rate for borrowers is because we are probably, or that's what they're saying is it's been an arbitrage opportunity for them to borrow from this facility and then get a higher rate, whether it's in the reverse repo markets, the money markets, any way that they can make profit on that, and then later on they can just pay off the loan, and it's pretty much free money. That's what the Federal Reserve is kind of saying is the reason why they're closing it. However, we will be able to call bullshit on that in the coming weeks if this continues to rise as the interest rates are higher, because then that tells us that one, these banks probably do need the liquidity, and two, if it continues to go up, then we know how bad the situation really is. So anything before and now, people are saying, okay, that's just the arbitrage. The 3.8% that we got last week that pumped up, that's them borrowing to make money in a different market and then paying it back at a later date. With the how many weeks do we have left? Got I just pulled up the roller. I think we got about 7 or 8 weeks left. 7 weeks. So yeah, we got 7 weeks, 49 days until this thing absolutely expires. And if that's the case, and we start seeing this continue to rise, if we get north of 200 billion or something like that, then we probably know that there are banks that are in massive trouble. I don't think it's just the regional banks. I think that it's going to be a lot more of the mid-sized, the higher, level banks, because again, this contagion will affect all of them. And even from since we got this news, there have been several banks that have announced that they're going to be closing branches. PNC the other night announced that they'll be closing 40 branches. And again, they're considered a regional bank, but they're one of the bigger banks that, very similar to Truist, very similar to Schwab, have a huge amount of Federal Home Loan Bank, loans out there shorter than 1 year that are operating as their, percentage of equity, which is not a good sign. Very similar to the other banks. And the other thing is they're got 55% of their deposits over 250K. So they definitely have a good amount of money in there. Question is, if we start to see deposit flight in a lot of these institutions that have similar numbers, and we see the bank term funding program go up, we might be in a very sticky situation come March, April. Let's see here. Yeah, that was a long-winded answer for everything I had to say on that, but it's really important to keep an eye on this because this, I think, is the American black swan. And I say that because this is our problem here, but a lot of this does also stem from whatever type of exposure that we have in the global markets itself too, right? That's something else we have to keep in mind. I do have the reverse repo here. Oh, go ahead.
What's kind of interesting around that timeline at the end of the bank term funding program is the halving is a month later. So, historically, not to completely shift on just a quick aside, but historically we see price dip leading up to and after the halving, and it goes down a little bit before it comes up. So, from a narrative, trying to just make that convoluted connection historically, it wouldn't that could kind of point to some sort of like just pattern recognition, the cycles being hit, right? So it'd be interesting to kind of pay attention and watch out for that leading up to April.
No, I think you're 100% spot on, right? These things kind of line up always uh, too perfectly to the point where it's like, you know, that's a little fishy that, all right, the banks are getting screwed while the halving's about to happen. Everything, the Bitcoin's going down into the halving, which we expect a 40% dump. But we pulled up that chart last week with the S&P overlaid with Bitcoin, or Bitcoin with the S&P overlaid on it. You can see that it's kind of correlated, right? So if there is going to be a crisis, there is going to be a good percentage move down in the equity market. It would make sense that it's around that, and that could be the reason why. Again, I think people think that the arbitrage reason for why they're ending the program means that the banks are fine. They're just kind of screwing over the system. I completely disagree. I think that there's more to that. I do have the reverse repos up here, and this current level thing is wrong. We're going down from here. We are sitting at $557 billion. I haven't checked what the reverse repo rate is today in terms of how much it's dropped, but we could see that this week alone we dropped 10% out of the reverse repo market, and we're getting closer and closer to going pretty much to zero. I think that within the next 2 months, there's a good chance we will be at zero. Um, I think once we get under $500 billion in this facility, there's a good chance that that thing bleeds out fairly fast. And again, a lot of these facilities where there's liquidity that can be utilized by these banking institutions, we saw that the OCE is completely drained. We're seeing the bank term funding program come to an end. We're seeing the reverse repo markets pretty much bleed out at this point. It's going to cause a huge shock to the system. And I think that's the equity markets being so overweight in one part of the market aren't going to be ready for the shock that is coming. The other thing is we know that back in December, November, December, there was a blackout window where, these companies did not buy any of their stocks. I'm under the assumption, and again, this is my opinion 100%, when we look at the banks, that all these banks and all their stocks and all these rallies that came within the period of October to December 8th or so, that is 100% them and all these other zombie firms, which we talked about, pretty much just buying back their own stock, right? I think that's the only reason why we're seeing this. I think retail 100% is helping the tech rally move up. But when I look at the banks, they're very much uninvestable. I know Steve Eisman from The Big Short was saying that there is no reason to be investing in banks because of how much their deposit flight has increased over the past year. And when I look at this here, I'm pretty sure that they are under the assumption that something bad is going to happen. I wouldn't be surprised if we do get a little bit of a rally here in the banks right before the bank term funding program ends. And that could be them just absolutely offloading some of those shares, right? Maybe to buy back a lot cheaper. But I don't believe that the institutions that are in charge of all, that know their problems on the inside are going to be buying this just to hold forever. I think that they're going to do what they can to survive. And I'm pretty sure that the banks can hear that the music is starting to slow across the board. So just something we need to talk about. I know it's kind of long-winded with the banks, but we can move on to other important data. Before we get into that, Randy, thank you for being here. We got a bunch of other guys that are going to be watching later. You guys, Chris, Ace, and you guys, appreciate you guys watching us all the time. Let's do this. Let's take a look at PCE. And let me just pull it up here real quick. There's a lot of stuff on the PCE front that is really interesting. Again, here it is. PCE pulling up from Zero Hedge, one of our favorite people to pull the data from. PCE month over month at expectations 0.2%, right? PCE year over year 2.6%, and then the core it went down 0.1%, right? So pretty much at expectations, kind of derailing the theory that inflation was going to be going up from here. I don't necessarily believe inflation is going up from here. I think demand is going to be really important, and that's going to play into whether prices go up or down. I think inflationary pressures are there, but I just don't think that the inflationary prices will come to meet that, right? And this is just base level what we're seeing with the PCE. We can go into this ad nauseum, but I think this is a good indication that the fears of inflation are being overblown. I think we're going to be seeing deflation, especially if we get further problems in Asia or Germany, both of which are absolutely impacted right now by the oil market, which we can talk about that real quick too. But when I look at this, pretty much tells me that market is exactly where it kind of wants to be. We're getting close to that 2% goal for the Fed, so you can anticipate that they would be cutting at some point this year. I genuinely believe we're going to get a lot of cuts this year. I think it's because they over tightened them. The interesting thing came with GDP, though, right? Because GDP blew everyone's expectations out of the water. Let me pull up the exact GDP number for Q4 of last year. I think it was 3% or 3 point something percent when it was expected to come in at 2%. And let's see, 3.3% annualized as opposed to the 2% forecast that we had for GDP. Now, the thing that's really interesting about that, people are thinking that the economy is strong and we're growing. Huge part of that was government spending. So that's pretty much what helped that number go up higher than expectations. That's not a good thing. That just means that there's more debt racking up. Just keep that in mind. This is all part of the narrative, all the things that are lining up in the global economy. I think these people are underestimating how weak the actual economy is and how weak demand is, just not in the United States, but globally, to the point where the government spending is pretty much eating up most of gross domestic product. And again, we know GDP matters, but it doesn't matter nearly as much as GDI. We'll get those numbers soon, and that's pretty much telling of how people and everyone's incomes in the United States itself are pairing up with the rising prices in the US. So that's going to be the important one. But on that front, I think we can move on to other things. I talked about the oil markets. Have you been keeping up with all the stuff in the Red Sea house? I know it seems like there's a lot of stuff going over there. I'll let you take the floor on that, and then we can look at some of the prices.
Yeah, I mean it's really interesting, right? Like you have pretty much the Houthi, which are an opposition group in Yemen. Yemen's been, for those who aren't aware of the situation in Yemen, they've pretty much been in like a weird quasi civil war since like 2012 area. They had a lot of sheltering with Al Qaeda, which kind of led to this split. So the Houthis aren't the party in control of the country, but they're led by an extremely wealthy leader and almost turned into like a paramilitary group in a sense. So they pretty much declared war on Israel, the US, and the UK because the UK and the US have been having coordinated strikes within Yemen to quell some of the Houthi threats. So as a part of that, right, the Houthis have said any ship, whether military or civilian, if they're under the Israeli, US, or UK flag, it's free game. Anyone else can come through. But if you're if you're anyone that's on that list that's not necessarily friendly to Yemen or the Houthis, you're like scratching your head a little bit, like, well, are they actually not going to hit me? Or like, what if they don't see the flag, or what if they just don't care, right? So, when you get the Red Sea blocked up, that's a huge pathway. Like I know British Petroleum BP, they said they're pausing all of their routes through there. So it's not quite to the same level of blocking the Suez Canal, right? But that's one of the entryways to the Suez Canal. So it's different than the tanker being stuck there for forever. But at the same time, it's just it's really causing a lot of disruption, and it's something that the longer it continues, in conjunction with the war in Ukraine and Russia, and the war in Israel, all three of those things together, they're causing a lot of issues in a lot of different places, but they also both tie back in because you have Russia controlling the Nord Stream pipeline, and now you've got all this mayhem going on in the Red Sea, and it's like we're running out of places to transport fuel through.
Absolutely, that was a great breakdown, man. It seems like we're having a lot of problems in energy right now. I just saw today we're having issues with LNG permits in the United States. We're seeing the price of oil go up. I'm very much on the side that believes that what's going on in the Red Sea is a coordinated effort to keep oil prices elevated on everyone's behalf. Because again, prices of oil being up benefits everybody pretty much. Especially people who have the interest in the amount of money that's in the market itself. I know it's going to be helping a lot of those countries over there. It also helps people who are in the United States that are producing oil, right? So it's going to be, when I pull up the chart here, it's going to be pretty interesting to see how much it's shot up in this
So
week.
when you say coordinated effort, are you thinking just OPEC? Are you thinking oil producing countries in general? Or is there anyone that you're specifically looking at? Because Iran is backing the Houthis, right? So it would definitely be in their interest to see, their opposition countries, namely Israel, the US, and England, struggle as rising oil prices? Or are you thinking this is beyond just that?
I think the only people that are going to be screwed over by this are going to be consumers, and that's about it. That's my assessment of what's going on here in terms of how demands from consumers in the months prior. We saw what happened in Israel, how oil dropped significantly post that the attack in October. Tells me that okay, these guys understand that the demand is coming down. I think for everyone's interest, again, that's your bread and butter in the Middle East and that part of the world, oil production, transport. That's going to be huge for them. I think the price of oil staying relatively higher for longer for a period of time is beneficial to them, right? I think it's also beneficial to a lot of our American companies that, even BP and all these other companies just charging more for it. At a certain point, though, the demand is going to come in and it's going to show that okay, we can't meet we can't these prices don't justify the demand that we're seeing in the market, and they will come down. And it's just really interesting to me because I'm going to pull up the chart here, and I've been charting this with the Elliott wave theory. I think we are heading for our descent in oil in the macro. But the interesting thing here is when I look at this chart here, we had 5 waves all the way down from September of 2023. And we had this little pump in October, which would have been what happened in Israel. And we went all the way up to about $89. And in the months that, or the weeks that followed, we could see that we went even till December, a low of $67.96, right? Now that's 5 waves there. In the time that's passed since, we've gotten this beautiful ABC corrective pattern. However, with everything that's transpired in the Red Sea, you would think that we would have saw something very similar to what happened here in October, once we got the news around Israel, that the price would have shot up pretty substantially. It's taken a while for this to actually start to finally see, the level that we're currently at, $78. And if I pull up the EMAs on this, you can see that we're right there on the 200 EMA. That was the target. $78 was the target. I said I was happy with the 77 because I thought it was possible. I still think it is possible that we could get a little bit of an overextension here. It's the 5th wave on the shorter time frame. If I pull up maybe like the 4-hour, let's do the 1 hourly. We could get some type of overextension, which we're kind of seeing here, right? I mean, could it push up a little bit higher to maybe even 80? Yes, it would have to be pretty quick, though. I think on the hourly chart, maybe not today, maybe Sunday or Monday market open. That'll be my thoughts. But I mean, this is pretty standard ABC corrective pattern. This seems like this is the way you trade oil. The price obviously going up with the news and everything like that that's going on in the Red Sea. But eventually, I think what it's leading to is something that the government, the United States government, is going to really want to make sure is here by the time we get to October, November, is cheaper gas prices at the pump, right? They don't necessarily want this to happen. I think this in the short term, the prices going up here benefits everyone, but eventually I think everyone knows that the prices will be going down. I think price of oil will be substantially lower come summertime. I'm saying I think without the Red Sea intervention that we're seeing right now, oil will probably be in the low 60s, high 50s. So that's just something I'm seeing across the board. And the problem with it also is, China is pretty much asking the Houthis to step down for the time being. I thought that was really interesting. But it's also in China's, it benefits China too, right? They need oil. The other thing is their exports. It's not profitable for them if the oil prices are extremely high, and they are having an extremely hard time right now with their exports slowing down as substantially as they have. And we do know that a lot of the supply chain issues that this is bringing is going to impact a lot of countries, namely in Europe, such as Germany, who is in absolute depression mode right now. So it's all kind of synchronized and interconnected. And I'm really surprised to see, I won't be surprised. I'm really interested to see how this plays into oil prices dropping down, a lot of the liquidity crisis and collateral crisis that we're having, and also consumers in the months to come, because I do think that we're pretty much standing on the edge of the cliff. And I think that this corrective pattern here in oil is pretty much done. And unless something crazy happens in the news that just, breaks this and we're in a different type of structure, I am under the assumption that oil is probably going to tank here going into the end of this. I guess this, whatever this recession market bottom ends up being, it could be a year from now. It could be 4 months from now, right? We really can't tell when it's going to happen. All right.
Yeah, no, I mean, I think it's definitely going to be something interesting to watch. I would say the one thing that I think I slightly disagreed with was when you were talking about the comparison between October 6th and now, right? It's like, even though we're seeing the attacks in the Red Sea, it hasn't gotten to the extent of like we've had a massive oil tanker blow up, or like a US either military or commercial ship has been just blown out of the water, right? Like we've seen some ships get hit, but as far as I can recall, and I may have missed some stuff, so I could be wrong, but I don't think we've seen anything just get like demolished to the point of, okay, we needed to like really be worried about this. It's more of, okay, we've had some barges get hit, we've had some cargo ships get hit. Let's avoid the area because it's just not worth, the what if of we do take an RPG, we do take a ballistic missile. So I think something like that is what would really cause the green candle to just fire up, right? Because that's when it's shit's hitting the fan. Versus, when the war originally broke out, you had the Peace Music Festival or whatever was going on, get paratrooped in on. And that was like, we really don't know what's going to come out of this, right? And it was a pretty tense first few weeks, and still is pretty tense. So I'd say that's probably why we're not seeing as big of a movement upward. But if things continue to worsen, that's where you start seeing the number really shoot.
Yeah, absolutely. It's going to be interesting, right? I think that right now, just the amount of time it's taken to just retrace and put in this corrective pattern is
Mm-hmm.
probably longer than I think a lot of people anticipated given the news. But, anything can happen. I think that let's put it this way, we're not far from seeing what the next price of oil is in either direction. So we could be here in a week from now and the entire oil market could be somewhere that we couldn't even anticipate, and the market is just absolutely reacting to it. Let's get into crypto right now because Bitcoin obviously having a pretty good day. It's up 5.15%, $2,050 as we speak. $42,000. You know, um, let's see where we were the other day. We were talking that we were at 39. I think we wicked all the way down to about 38.5. So thought it was going to go a little bit lower. It didn't. It found some support right here from the November, like Thanksgiving area, or a week from November. Bounced off of that, putting in a pretty good move up here. The question is, how long does this last? Right. Um, I look at the stochastic RSI. I think that this is moving pretty fast, given we haven't even had that great of we haven't even got the close for today. Come the close tonight, I mean, the stochastic RSI could be extremely close to being overbought. And then, by Sunday night, we could be completely overbought. Market opens on Monday. It's a different story. I think that's something we have to keep an eye on. I think the most important thing, though, when we look at Bitcoin is seeing if it puts in a lower high. If you get the confirmation of a lower high, I think that's the first beat. That's wave two. So you would have your, if we look at this here, yeah, wave one, massive, wave two, let's say 44, 45, right around there. And then after that, you'd have, your wave three, which would be pretty freaking deep. And I messed this up, but yeah, it would be a pretty deep push down for wave three, in my opinion, especially with how big wave one was. I would anticipate it's at least the same length in percentage drop, if not a little bit more. Then we'd probably have a bounce, probably somewhere around here. I would say, what is that, like 34K? Test the bottom of this parallel channel, get rejected from that, and then we could probably see ourselves at the wave five bottom, which doesn't necessarily have to be extended, but it's probably going to be somewhere closer to where we were back in October before we started seeing this massive pump up. But this is a good move to the upside for today. I think it's also putting an ABC corrective pattern. You have to watch this over the week. We got a few days over the weekend, see how this is playing out. But this could be wave one, wave two, pullback, wave three, pushes up to 45K. But yeah, that's pretty much the technical analysis I got on Bitcoin. Any thoughts on that, or what we could be seeing over the weekends coming into Monday?
Yeah, I mean, I see a good amount of support right underneath 42K. Like, I think breaking back over that, good sign. But at the same time, it took a while for us to get back up there after dipping down. So I don't know. I mean, I could see some volatility over the weekend. You've got the TradFi markets and the ETF, or TradFi markets out, so ETF managers probably not trading on the weekend. I probably wouldn't be. So yeah, I mean, I could definitely see, if a bunch of knuckleheads want to lever all the way up and try and push the price, I could see that. But I think it's seeing the amount of spot volume that the ETFs are pushing. Like I want to say it's been $20 million so far since the ETFs got approved as far as volume that they've had inflow and outflow. So it's like, those big spot movements wipe out leverage. And now it's not just our good old pals CZ and Justin Sun that we assumed were doing it. Speaking of which,
Yeah.
did you see the Sun thing about how Huobi was claiming to have 300 mil liquid and CoinGlass and DeFi Llama are showing 140, and their proof of reserves went down this morning. You can no longer access them.
Interesting.
Who
I
would have
didn't see
thought?
that. I mean, Justin Sun, he's a stand-up guy. He takes care of his own in that industry. So, you know, I'm sure that he has his reasons. Everything's fine. Those exchanges. I mean, Huobi, Poloniex, all those wallets that are moving Tether. I'm sure everything is just fine in the end. That he's probably just misplaced the wallet somewhere. But no, I didn't see that. I saw the CZ stuff about him like willing to put up collateral as a way to get back to I can't remember where was it. Probably like where was he at in the UAE, I think, or he wanted to go see family somewhere because someone was sick. But it's like
Yeah,
if you leave,
I think he was based out of like Dubai, UAE area, maybe Abu Dhabi.
yeah, it's I'm like if you let that guy leave this country, you will never see him ever again. That's a guarantee with CZ. So I'm hoping they just get to February. Dude's gonna have to sing if he doesn't want to spend the rest of his life in prison. I don't think he will, but I think he would get a pretty tough sentence in terms of time if he doesn't cooperate at all. Because I think that there's bigger fish that they are trying to fry in that game. Justin Sun might be one of them, right? But yeah, that was just the only thing I saw on the CZ scam front. But yeah, I mean, Bitcoin, I'm just looking at this right here. I was looking at the Bitcoin liquidation charts for CoinGlass. I'm going to pull those up real quick. It seems like the funding rates are pretty negative right now across the board on OKEx and some of the other exchanges. I'm not necessarily convinced, that we're going to shoot up to the moon. I think there's a bit of a squeeze here. And I think that pocket of liquidity is from where we are currently at 4,200 to maybe even less than what we're anticipating. I'll say 44.5 just so trap some longs on the way down too, right? I think that's very possible. So we could see this could be our wave one, trapping this liquidity here, going back down for a little bit more, pushing up again to catch even more a little bit higher if any does form down here as people start shorting as the price goes down. It's going to be it's the lower high that we want to see before we get another move to the downside, because that's going to formulate and solidify the fact that we're putting in a lower high. The top is most likely in at 49K. I think it's in at 49K, but I'm willing to change if we get above 45, 46, because then we're probably going to go to 50 and get a double top. But right now, looking at this, I think that we're probably going to liquidate a lot of people this weekend, going back and forth in that range. Not necessarily doing anything too crazy outside of that, right? I'm going to look at one other thing right now. Let's take a look at the funding rates just so we can all see what's going on there. Yeah, I mean, there's a lot of green, there's a lot of negative right here. Binance has been really weird. I don't trust any of the data off of Binance for the time being, but OKEx seems like everyone's short there. I think people are going to get squeezed on this one, right? We look at liquidations period. You can see that we're about $120 million of liquidations, mostly short liquidations, and long liquidations, nothing like 23 million or so. So across the board, we're seeing these movements. The price pushing up today obviously screwed a lot of shorts that were probably short way too late, probably around 38.5. But I think that there's a good chance that we see Bitcoin just sideways corrective pattern this weekend. If we start seeing any type of price pushing up higher, I wouldn't be surprised if we start seeing Grayscale or Barry Silbert and any of those fun guys just absolutely saying, you know what, let's take this opportunity to dump a little bit more. We got plenty of Bitcoin, and there's plenty of liquidity out there to cash out and make some money on that. So I think that's where we are, where we stand in crypto right now. Anything
Yeah,
else on that front?
Well, I just wanted to add, I think right now is a really important time to be really closely watching the funding rates and liquidations. So when I woke up this morning, which you and I were talking about pre-show, it was 3 a.m. I had a hectic morning, bunch of work to do, but the DEX that I trade on, liquidity in Bitcoin, Ethereum, and Sol is all tapped. $0 available both sides. And it's a relatively large DEX as far as the volume it trades. They've got $140 million in liquidity for Bitcoin, 130 mil for ETH, and about 22 million for Solana. So just under $300 million between those three pairs. There was not a cent of liquidity. And I was just like, I mean, this is a DEX. Like, this isn't an exchange. You don't have the same size whales that are moving on this thing, and you got $300 million tapped. So, I'm gonna assume a lot of that is people throwing down some leverage, and doesn't take too much price movement to liquidate out when that's the case.
Yeah, I mean, the less liquidity there is, that price is going to fluctuate so fast. There's gonna be a lot of people who are gonna get screwed over on this too, because, and again, we talked about it last show when you and me were on, with Bitcoin's price being around 38, and people were still using margin longs, right? Well, they're gonna take advantage of you, and the same thing with shorts. There are probably a bunch of people who opened up shorts right around there with margin, and it's like, well, we're gonna push up here because now that it makes more sense to screw you guys over. But it gets to a point where it's just gonna be like, there's no liquidity. Even the price of just people holding spot, it's going to feel like you have margin at some point, and it's just going to go down faster than you expect, or it's going to go up faster than you expect, right? I think Bitcoin right now is a very dangerous market. I think all of crypto is. I lost $40 on a short last week, and I was like, you know what? I'm fine. I don't need to be in this market right now. I'm just going to save my capital. I'm going to buy at the bottom because everyone is wrong, and you, me, and J-Web are all right, and everyone who watches this show is an absolute genius, and we are all going to just wag me, right? Wag me sounded terrible the way I said it, but it's definitely I think a strategy that's safe and sound right now. I think crypto still is dangerous, and again, I think it's more dangerous the closer we get to February, with CZ starting to open his mouth and say some fun words that we're probably going to be getting the recordings to, or the text from the hearings. But across the board in crypto, I'm not too concerned about anything else. I think that alts still, there is the possibility alts could still rally. I'm not sold on the fact that they are done yet. I think there is a good chance we could see one push up. I think ETH and Bitcoin are kind of done, but I think that some of these other liquid altcoins could definitely see a quick run up real quick. But nothing too crazy there. I do want to jump to Asia right before we head off, because Asia's going to have a crazy start to the week, I believe. Maybe I'm wrong. I could be wrong. I've been wrong before, but I do think that the Hang Seng and some of these other indexes are going to be in some deep shit if things don't work out properly on Monday. So let me just get into this first, and we can see that the Hang Seng is bouncing here. It had a really good move off the announcement of the liquidity. This is the 4-hour chart. I just pull this up because not enough data. But could we be seeing an ABC corrective pattern? Yeah, it's possible we could get up a push higher. It's not going to happen until next week or the week after, if that is the case. We could also just be seeing a dead cat bounce. Those are the two scenarios I'm seeing with the Hang Seng and some of these other Asian, specifically Chinese indexes. I think that's every rally that they have are probably going to sell off. A lot of money that they're hoping comes back on short might not. And a lot of that does have to come down to what we talked about last time, exports. If exports are not pumping, there's a good chance that they're going to find themselves parking a lot of that money in Japan. However, Japan's having some issues too right now. You can see that there's talks of rate hikes coming. Said if Japan does do rate hikes, that is absolutely the most dangerous thing that we could see to their equity market. Last time they raised rates at a time like this where inflation was high and it was a speculative bubble. Well, you got to go all the way back to, I can't even do this on the daily. I got to pull up the fucking monthly. Last time was back here in December of 1989. We're not that far off. We've had a pretty good sell-off recently. That's a really good wick down. I don't know if we're going to bounce back from that. We could just be putting in a lower high, and it could be, shit. All right, there we go. It could be something like this, right? We don't get a double top. We just put in a lower high, and then you put in a new low for the Nikkei at some point in the next 15 years or so. So that's one thing I'm keeping an eye on. But I do think that this is a dangerous trade here with people parking money in Japan, especially if they're mulling over rate hikes. They don't like to do it, but I wouldn't put it past them if things do start to get bad in the global economy, because I think a lot of these central bankers are going to be forcing their hand to correct something that cannot be corrected. And the other thing too is with the equity markets, obviously they're a little bit red today. Tech's down very little, first day in a long time, but we don't need to go over that. The VIX is being crushed significantly. And at the same time as being crushed, it's been going up with the equity market too, right? At the beginning of each day, we see that the VIX is up a little bit higher. So what that tells me is maybe a little bit of distribution. Maybe people are covering some of their positions afraid of their VIX short and they just need to get out of it. That's two things that it could be. Question is too, why is the VIX up with the US dollar? And I think the dollar is going to be as overbought as it is. I think there's a good chance that we could be pushing up closer to that 105.659 again. Does that line up with our theory of something happening in March? Maybe. February, March could be really interesting. I think earnings season is still very early. We're seeing how many jobs have been lost or are going to be cut from, to save, what is it? Cost saving job cuts, man. It's so hard to say that sometimes, but that was a theory. That was a theme that we thought we were going to see, and we're starting to see it, right? SAP is laying off 3,900. Intel is laying off a good amount. eBay is laying off a good amount. Levi's,
Xbox.
like all these. Who was that? Oh, Xbox, yeah, with that.
Xbox laying off a lot. There's a lot of layoffs going on in the gaming industry right now.
Absolutely, and that's not a sign of a fucking bull market. If I'm mistaken, right? I think that it's not bullish to be losing your job. Equity markets are very wrong right now. I don't care what anyone says. Even if this is at the top, people think they're getting a good deal. Good luck. This market's not for me right now. But the thing I brought up China with is there is the possibility we could see an absolute black swan event, and it's kind of lining up. Maybe it doesn't happen right away, but it could be happening over the next few months. And I'm going to share this article. This is straight from Reuters about the possible liquidation that Evergrande has coming up on Monday. So they had pushed back. Man, what the fuck are with all these ads? How do I report this ad? All right, there we go. Evergrande's possible liquidations happens next. So we know that last December, I think it was like December 8th, they were supposed to decide in a court what they're going to do with their assets. They pushed it all the way back to January 29th. That is 3 days from now. Sunday night around, I don't know what time in the US, but Sunday night when the Asian markets are open, we might be getting more news of that. Definitely Monday morning, you're going to know exactly what happens. The question is, if they do decide to liquidate their assets, they do decide to do this after they're injecting all that liquidity. Look at how much they expect to be getting back. That is, go down here. They said that, here it is. Evergrande cited a Deloitte analysis during a Hong Kong court hearing that in July that estimated a recovery rate of 3.4% if the developer were liquidated. 3.4%. That's what all the creditors would get if they sold off all the assets, right? Now, it's said that in September, it would be less than 3%. And a lot of their bonds were pennies on the dollar, like 1 cent for each dollar that they had put in. That would be a massive blow, massive loss. And by going through a fire sale and selling all those assets just to make as much money as they possibly can, what is that going to do to all the other assets in China? What is that going to do to all the people who have exposure to China? Everyone trying to buy the bottom in China right now. I mean, you're gonna wake up to a massive red candle, just like anyone who had Evergrande stock did when they had some trouble back in 2021. September 2021. So I'm looking at this right now as something that we need to keep an eye on. I think it's gonna be fun to watch come Sunday night. But we also know that February 5th is a big day for them because that's when they're also going to change some of their rates and their percentages given their stimulus package. But this could be something that, say, lines up with the bank term funding program ending, and it's just like, well, they need cash, we need cash. People are taking everything out of the banks. Germany's pretty much in a depression. It's going to blow up at some point. Even the ECB saying that they weren't going to raise rates. Now they're thinking about they weren't going to cut rates. Now they're thinking about cutting rates by summer. Probably means they're going to be cutting sooner. It's very similar to what the Fed said back in December. I think one country is going to force all their hands, and it's going to be bloody. And there's a good chance that it could be just an absolute crash. It could be in 1929. I hate saying that because it's like, how likely is that going to happen? Who's going to tell you that it's going to happen like that? Me. But I don't think that we're going to see a corrective pattern on the way down. I have a funny feeling, and I hope I'm wrong, but I think we're going to see a flash crash all the way down, and it's going to be bloody for a period of like 6 months or so. And maybe it gets better. Maybe they find a way to fix it, but I don't know. I feel like everything's hitting at the worst possible time, and no one's prepared for it. It's all I can say. I hate to be so bleak to end this episode, but I don't see sunshines and rainbows come Monday morning, at least in
I mean, I
Asia.
don't know if it's you that's looking bleak or if it's the Bitcoin chart right now. It's
Oh boy,
been on
let's
a
pull it up.
steady down only path ever since you turned away from it.
Man, I shouldn't. You know what? I'm Jim Cramer. I'm Jim Cramer. There should be an inverse M&S. Anything I say.
But speaking of which, you want to pull up Sol and do a quick little
Let's do
analysis
it.
on where we think it's heading. It's looking like the worst between Bitcoin, ETH, and Sol so far.
Yeah, it's I got to pull this back a little bit. So, I mean,
It looks
see,
like it went up to Sol got double rejection around like 93.80 and just been on a path down in the hourly since.
and again, I'm looking at Sol right now on the macro. I'm trying to think of, okay, is this pattern done? Question is, this area is really tricky for me because I could see it just rallying one more time, and I could be the wave counts could be off.
Bouncing straight up.
But the thing is, if this doesn't hold and it drops again, let's not get so excited, right? I think that's the thing where you have to kind of throw out some of the technicals and be like, it could say wave 5 is coming, but something happens and it's just like, oh no, this ended up being on the 3-day chart. You can see that this was actually, wave 2, and here comes wave 3 coming down. I think that it's very dangerous here. Again, with alts too. I mean, seeing this, there's a lot of resistance in this area, right? We got resistance here, 94. It seems like it's bounced off this and it's consolidated. It's underneath it and it's testing it right now. Look at the hourly, like you were saying. The hourly is heavy. The hourly is heavy, and I mean, just to be an asshole right here, A, B, C, from what looks like a 5-way move right down, 1, 2, 3, 4, 5, something like that. So we could have another 5 waves down for Sol in the short term. But yeah, I don't like this chart at all. I don't like this chart. I don't like Bitcoin's chart, and I don't like ETH's chart because this one's more so. Solana seems unpredictable to me, but the others, I'm not convinced that we're going to see an alt season. It's possible, but I'm not sold on the idea that this is going to push up. How much would it have to push up? This is why I have a problem with it. Where you're talking about how
well, to me, the reason I want to look at Sol is like what's scary about Sol is just how up only its run was, right? And they didn't really test any resistance on the way back up. So you really only have the original Sol run up to 200 whatever to test off of, and it's like, but how solid was that, right? Because Sol's biggest cheerleader at the time and most avid backer was SBF and FTX, Alameda, that whole bunch, right? So it's like, it's almost like Sol's going through its whole new, like, forget 2020, 2021. Just it's almost like the rebirth post FTX, like, you know what I'm saying? Because you had a bunch of people stick through with it all the way down to $9, but at the same time, it's like they already wrote it down to $9. At what point is it let go? Right?
Yeah.
Is it wait back till it gets to 180, 200, or is it, well, shit, I was DCAing in at $9, 10x from there, so maybe I gotta sell some.
My problem is just this, that people think that it's going higher off of no logic whatsoever, right? And again, they went up.
Hey, the Saga Genesis and Saga 2.
I'm still waiting on my Sol shoes, right? Those I don't even know what they look like. They look like a pair of K-Swiss, white Reebok knockoffs.
They look like bowling shoes.
I think they have less
like the
traction.
bowling alley shoes where they're real flat and they got like no structure to them. That's what they kind of look like. That being said, and I don't. We could probably cut this off and talk about it on our own. I kind of do want a Saga phone, just to I just want to see what I've heard people say the material itself the phone's built of isn't great and that it's an old phone that got passed up. It's like, okay, that aside, I kind of just want to see what is the experience of a blockchain enabled native phone. You know what I'm saying? I think it'd be interesting to mess around with.
It's something stupid that I want. What? I want an e-ink cell phone. I don't know why. I just feel like I wouldn't fuck up my eyes looking at the charts, but also it would take 9 hours for it to load to see real time what the charts are doing. I wish e-ink was a lot faster. I don't know why I even brought that up. I don't know. You said the Saga phone. I was watching videos on it on YouTube too. I'm like, I mean, it does look kind of cool. I would like to see. Yeah, I mean, we can do a whole show on the Saga at some point. It'll be just you and me. We'll unbox it. We'll do all that shit. But yeah, I got nothing else on the charts today. Actually, one last thing. Keep an eye on this. This is the yield curve getting closer to zero, so reverting completely. Got a bit of a double top here. The rates currently today, the 10-year is up 0.66. The 2-year is up 1.44. So there's a good chance we're probably going to pull back from this a little bit. But at some point, the bond market is going to fully price in the fact that we are getting rate cuts, whether they like it or not. And when that comes, the tilt is probably going to go higher, TLT, and we're going to be at a point where we can finally acknowledge a recession. But that also means rate cuts are coming, and then we're probably going to see a good push down. But I wouldn't be surprised if we get the push down before the first rate cut even comes. But yeah, I mean, there's just a lot of stuff that no one wants to talk about. This is the stuff that's important. This is the stuff that's going to tell you where we're going to be 12 months from now. And that's all I got. So thank you, everyone, for being here. It was a great episode with my friend House today. Should be back next week, regular time. J-Web hopefully feeling a little bit better. But guys, thanks for always being here. Watch out for the aliens. Stay safe in the Civil War. I'm joking about everything. Obviously, just more than anything, just watch the Asian markets come Sunday night. Take care, everyone, and we'll see you guys next time.